Alright traders, today we're going to be talking about emotions. Last video, the 101s, but now the really important topic of emotions. We're going to be going over fear, going to be going over ego, going to be going over many different topics today that I'm excited to go over because ultimately emotions are something that don't necessarily just go away, but we learn how to control them. And we're going to talk about that today. Let's get straight into it. You cannot merely react on an impulse and expect success. I mean, I remember when I first started trading, I saw something going up. I said, oh, I'm going to miss out. I need to hop into this. It was the FOMO. And the 10 percenters take advantage of that emotion because they understand, and they've been in the market so long, they get that human emotion never changes. And so they take advantage of those 90 percenters buying that FOMO. And that's what really sets apart the 10 percenters from the 90 percenters is they don't allow those emotions to control them. In fact, they control the emotions. So they recognize what emotion is telling them what, and it's almost become intuition in a way. They've been in the market so long, experience is your best teacher, that they understand what emotion is telling them what. It's really important when you're starting to trade to write down the emotion. Why did I get into this? Well, I was feeling FOMO. Why did I sell this? Well, I was feeling fearful. And so 10 percenters have recognized that. And so they start selling that FOMO and buying that fear rather than doing the opposite. So with that being said, I want to go over this quote I saw a while back, and it made perfect sense to me. Stocks are not really bought in fear. They're bought in hope, and they're typically sold out of fear. Now, I want to show you guys a chart. This is from IntensityStockWatch.com, this chart right here. And this is exactly right. Oftentimes when we first start trading, we buy that FOMO on up, and then the thing just sells on off forever, and then we end up selling that fear. And that's when the 10 percenters are buying the fear and they're selling that euphoria. They sell at the top, they buy at the bottom. And that's what really sets them apart. They understand that emotion, saying, oh, this is going up, let me buy it, buy it. But they understand that that's where the 90 percenters are getting in at. If you really want to set yourself apart and become part of the 10%, you're going to do what the 90 percenters don't do. And a really big problem with buying FOMO is oftentimes it leaves you deer in headlights. And if any of you guys have been in the market for any extended period of time, you know exactly what I'm talking about. I mean, you'll buy the FOMO on up, and then let's say the thing just has a panic, it sells on off. It oftentimes will leave us in like a state of paralysis. We won't know what to do. Mainly, we never predefined our risk, and this is what oftentimes will happen with buying FOMO. And why we oftentimes do see those huge sell-offs is because we never predefine that risk. And that's something that amateurs do. And even bigger amateurs, they just hold and hope, and they don't ever sell the position because they're too focused on the profits to care about risk. That's what oftentimes amateurs will do. All they can think about is money. And so that they have no risk. There's no risk. There's no predefined risk in play. And that's why oftentimes there'll be so many emotions, this emotional roller coaster, that kind of dopamine rush when you're trading because you don't know what's going to happen. But the thing is, if you create a plan and you have predefined risk, there's really nothing to be fearful of. Professional day traders, they focus on the risk first and then the profit second. And this leads me to my second point, which is hope. We had fear, now we have hope, and there's many different variations to hope, right? That is, when a stock is selling on off, there was no predefined risk at all. You end up just adding to that loser. That's adding and hoping. You're saying, I'm just going to keep pretty much digging myself deeper and deeper in a hole. And this is kind of what Warren Buffett said. He said, the most important thing to do if you find yourself in a hole is to stop digging. Yet oftentimes we'll just keep digging and digging ourselves deeper and deeper in a hole. And why is that? Because there's a predetermined bias oftentimes on the stock, and it may have to do with the fundamentals. Now, I'll just call them fundamentals because I don't even look at them anymore because I would create a bias, and bias is awful. It's awful to have as a day trader, especially if you're not a long-term investor. You're just trying to get in and out of the market because the stronger opinion you have on a stock, the stronger and harder it's going to be to get out of that stock. And so I just trade the chart here and not really pay attention to the news anymore. In fact, I've seen news make a stock go down. Have you ever heard the saying, buy the rumor, sell the news? Here's a stock right here. I'm going to show you guys, MTBC. Now, guess which day this stock came out with good news? You probably guessed it wrong. It was the day that it tanked, the day that it sold off. And that's where that saying comes into effect: buy the rumor, sell the news. People bought the anticipation of that news being released, and then they sold into the 90%ers buying that news the day of. And so we have to eliminate just that hope and that bias and that fear, all these emotions that come into play. How do we control them? And one way for me to control them is not to look at them. See, if I really did read the news on a lot of these stocks, I'd probably buy into it as well. Like, oh my gosh, this drug is going to cure diseases. I got to buy into this versus trading the chart. We got to get rid of that bias. And ultimately, the reason we got to get rid of that bias is because the market really doesn't even care what we think. It really doesn't. The market just provides us with opportunities that we can capitalize on, but it doesn't care what we think. And when we allow that bias to get in the way, it allows our ego to precede our trading. You got to want to be able to make money more than you want to be right. But most amateur traders, they just want to be right more than they want to make money. And I got a note that I have to read every single day when I come into the office, essentially, that says, don't allow your ego to trade for you, because it's easy to let that preside over your trading because you want to be right. I mean, but that becomes more results-oriented versus process-oriented, and we've gone over this many times. Is just because you have a red trade, that doesn't mean it's a bad trade. You got to be more process-oriented, not saying, oh, red, bad, green, good. It's more of, did you stick to your rules? Did you adhere to your trading plan? Okay, then it was a good trade, because you're not going to win every single time. But if you stick to the rules and you take a red trade, that's great. That's great. You're sticking to your rules. You are laying down the foundation for success. You're writing the blueprint. Now you got to start building. So thank you guys for watching. This is just kind of touching the surface of these emotions. We got fear, we got hope, we got fundamentals and ego and bias, all these things. This is an introduction to emotions. I hope you guys learned something. Thank you so much for watching this video. Hit that like button, guys. We'll see you all next time.